today, the star of the show is a man coming straight out of the burgeoning metropolis of Austin, Texas, but he's an old school Austin Texanite or Austinite. I don't know how you say that. He's got an electrical engineering firm that's worked with some incredible startups in that area. He's got an incredible breadth of experience in real estate, from Iowa to Virginia to Texas to Florida, and syndications of multifamily and commercial real estate and RV parks and short-term rentals that he's getting into. His name joining us today, our guest investor, Darcy Laveau. Welcome to the show, Darcy.
Thank you. Thank you for having me. I appreciate it.
Darcy, do you want to kind of just give us like an inventory of everything that you got that you got in your portfolio these days?
We hold several single families, both in the Davenport and St. Louis area. That's one portfolio that we hold with our self-directed IRA within there. And then we have 3 properties with JWB. We also part owner of a apartment complex there in Richmond, Virginia, along with the duplex. And we have apartment complexes in the Houston area. And we just broke ground, as I mentioned, just north of Austin, partnered with several other people on an RV park that hopefully will open here in late August or early September. We struggled with the permitting and things like that with everything that's gone on the last few years, but survived all that. And yeah, we're really looking forward to that. And that's going to be a big focus of ours moving forward, just because of the cash flow that can be created from that.
Darcy, I'm really curious, and you're an electrical engineer, right? By trade, right? Could you take us back to before you started to invest in single family rental properties? What helped you overcome the challenge of doing something that maybe others thought was non-traditional, maybe outside the box? And how has that helped you even go farther outside the box into some of these other asset classes?
Well, I think what really introduced me to the real estate investing and the potential there was the electrical engineering firm. Instead of renting, right, we decided to buy the lower level of our building. And as we started getting renters into the other space and looking at that potential of being effectively our pension plan, right? As self-employed, you don't have that. So I was like, geez, I got a plan for this. And then so when I started breaking down those numbers and looking at those with the other owners, I said, geez, if I had 4 or 5 more of these, that's all I'd need, right? But making that huge purchase, right, I was like, okay, so let's start with something smaller. And so it was the single families that we went to, but it didn't take long, right? Because we were fortunate enough. I was at that age where we had a nest egg, right? And so I had money to work with right out of the gate. And we took the baby steps, right, of the single family, but tried to quickly move into the multifamily. I knew that was where I wanted to move. And in doing so, stumbled across the RV parks and the lower operating expenses associated with that. But we still love the single family duplex approach. The cash flow very well for us. They're appreciating very nicely. And so that's kind of the legacy that, we'll be leaving behind. When you start working with financial planners and things like that, you got to start thinking about, how are you going to handle all of this appreciation and these gains? And so part of it is for us is, yeah, we're going to enjoy some of it, but we're going to leave some of it behind for our heirs to let them deal with the tax implications. Hopefully they'll be able to figure out ways to minimize that. But yeah, I think, and in talking earlier, I think the big fear I had was investing from a distance, right? Just couldn't imagine buying a house sight unseen. And going on that tour with JWB again, pretty much got us over that hurdle, and understanding that relationship with your property management company is critical.
So Darcy, this is always my favorite slide, my friend. So what we're looking at here is your total portfolio review beyond just the individual property and beyond just the cash flows. We're now taking a look at all 5 profit centers. And if we look at your total portfolio review from all 5 profit centers, we're going to go down the line here. For net rental income, as we mentioned, you have over $14,000 in net rental income. From tax savings, you have over $21,000 in tax savings. This is something that most real estate investors don't even pay attention to when they're thinking about buying their rental property, or they're thinking about buying this rental property compared to investing in the stock market. Right? $21,000 over 4 years is real money in taxes that you don't have to pay because you get these incredible tax advantages in rental property investing.
Yeah, and I'm not, sorry to interrupt, but I'm not a CPA, but we haven't paid a nickel in tax for the rental income on our JWBs. And a matter of fact, we've accumulated a significant amount of
write-offs.
Yes, so that when we do sell these properties, we're going to be able to offset a lot of that gain with that accumulation.
Absolutely. And knowing that you're in other asset classes as well, many of those asset classes, you can use the additional write-offs from rental properties that you have here to write off the gains and cash flows for that RV park as well.
Exactly. Yeah.
Right.
Yes.
Yeah. You are crushing it, man. That's a cool topic we haven't really talked about. But yeah, tax savings just make you smile. Once you get into this asset class, you look at your taxes and they come out and you're like, oh, wow, I knew this was a good idea. I might not have really understood why I was saving taxes, but you'll understand when you don't have as much taxes to pay, coming tax time. All right, next up, we've got principal pay down, another often overlooked profit center in rental property investing. This is Darcy's residents paying his loans down for him. This is not this additional pay down that he's done with the net rental income. This is just built in. His residents are paying his loans down for him to the tune of almost $27,000 for Darcy. And I know that helps you, bud. And next is the big one. Darcy, you picked an incredible time to invest in Jacksonville rental properties. We've seen probably double the home price appreciation levels since you started to invest in 2018. And because of that, your upside on these properties has been substantial. From your 3 properties since 2018, you've accumulated $260,000 in home price appreciation across your properties. Did you know that?
Oh yeah, well, only because we're cash out refi. But
oh, that's right. You just recently got the evaluation. What was it like when you saw the values?
Well, we haven't officially got them back yet, but the projection is, yeah, it might even be a little bit higher than what you're putting there, because the area is just really appreciating quickly.
Yeah. I mean, just put the numbers to it, right? Darcy bought his properties at like $180,000 or so, those new construction properties. Those properties today sell for like $275,000, right? Call that roughly 85, 90, whatever grand that is per property. And 90 times 3 gets you to $270,000 in appreciation that he's been able to earn. The numbers are staggering. It doesn't always play out this way, but even if it was half that, right? A normal market appreciation is probably half of what Darcy's seen since he invested. Even if it was half that, most people never pay attention to home price appreciation. But if I'm not paying, listen, there's 130 grand there, even if it's half that. I'm definitely paying attention to that when I'm investing in a rental property or choosing a rental property market.
Yeah, we'll be able to pull out almost 100% of what we put into the homes in a 4 to 5 year time frame. And if you were to ask me when we started, I would have said, oh, that's going to take 10 to 15 years. So yes.
And if you would have asked me, I would have told you it's going to take that long too in the beginning, even though we knew the market was going up. This is a great example of prepare for the worst, hope for the best, and be treated with the best, really, as far as home price appreciation. You shouldn't feel bad about it. You took the leap. You took the leap of faith where most don't. So congratulations there. Lastly, inflation hedging, something that we all need to be aware of. The consumer price index is now 7.9%. That's what the government measures inflation with. That means if your money is sitting in the bank or it's sitting under your pillow, it is losing. It is losing value. Inflation erodes our value, and it's never eroded value more in the last 40 years than it is right now. So tying your investments to an inflation protected or inflation hedged investments like rental property investments is a very, very smart move. Something I've added here is I just wanted people to see the full picture, that I'm actually including selling, holding, and closing costs into Darcy's evaluations here when I'm getting to his returns on investment. And so you can see that number, $79,500, is what he would typically have to pay to dispose of the assets if he was going to sell. I know he's not going to, but I just wanted you to know that's calculated into these numbers for return on investment as well. I want you to know that this is these are real numbers. So Darcy, when you came to us and you say, hey, Greg and team, I'm going to trust you with my investment dollars, right? I'm trusting my ability at some point here soon to go hunting, fishing, golfing. And the better you do, the quicker I get to go. And the thing that you asked us to be accountable to was 9.5% returns. That was our expected return on investment for your portfolio. All 5 profit centers combined, you are at 30.6% return on investment, brother. Did you have any idea?
No, I didn't. No, that's phenomenal. But a lot of that goes to JWB too, with the way you've managed the properties and kept tenants in place, and your tenant screening application, just everything that y'all do is, you're definitely, I've mentioned this before, you guys are the gold standard for me, because I have property managers all around the company or all around the country. And I always typically reference what you guys do and try to get others to follow. Just, it's been a joy and a lot of fun investing with JWB.
That means a lot, Darcy, and thank you for sharing that compliment. That's incredible.
Yeah, I think it's one thing that people getting into investing need to understand is, property management is the key. It really is what allowed me to triple my returns over expectations, quite honestly.